Okay. Let's have a very quick review, guys, of the power of R and the packages as far as downloading stock prices are concerned. In this session and in the sessions to come, we'll be using some very powerful packages like Quant, Quant, QuantStrat, quantmod, the technical trading TTR packages in R. Okay, so may I request you to once again, by the way, guys, whenever we start our session and if we're working on a particular file, our markdown file, make sure that you already load the, if there's a file that we're using, make sure you already load it so that when we start, we can start the ball rolling immediately. So let me also, I don't think I was able to load already these packages. Okay. So let's go to the getting of the stock prices. Okay, did we get these stock prices, guys? GSPC, SPY, SLY, JNKNC, WI last time? Did we do that? Okay. Okay, so very easy, guys, to get stock prices. Also ETFs from Yahoo Finance. Okay, and then we said that the default is just get symbols, and then R will have their default settings. Okay, but if you want a more specific download of data, for example, Yahoo Finance will the default will be 2007 January 1 or January 3, I think. But if we want to download a date other than that default date, so we can use the from and the to function. Okay, so this is an example where we're downloading. What's the difference between this one? From, to. Okay, so this is daily daily stock prices versus weekly stock prices. And there's a note here that in Yahoo, the weekly stock prices are actually the average of the week. So unfortunately, if you want, there's another way to get, let's say, only the Friday values. Okay, when we go to time series, we're going to use that. But if you use the periodicity is equal to weekly, what Yahoo Finance will give us is the average of the weekly prices for that particular week. And we learned last time to use the head and the tail function, where the head gives us the first elements of our object. If we don't specify a number here, then it will be the first 6 elements, and the tail gives us the last 6 elements, unless we specify the number of elements we want to see. Okay. All right. So, okay, I think were we able to get this? Wait. There's a note here that it gets the end of the week prices usually Friday, unless it's a holiday. Wait. I saw in another article. Okay, here. Yahoo Finance weekly and monthly volume is the average volume, okay, and not the total volume for the week. So it gives us the average volume. Okay, so usually it's the end of the week, a Friday, but it does not give us the value on that specific date, the Friday, but it gives us rather the average of that particular week. There's an option to download weekly volume data reported on Yahoo Finance. Okay, it's the average volume for the period. I think I have. However, the weekly and monthly period that Yahoo Finance reports is the average weekly volume or average monthly volume when we choose to download Yahoo Finance data of a lesser frequency. Unfortunately, we cannot simply scale up the average volume by a fixed number, as the number of trading days is not constant for each week, for each month, or each month due to holidays. Okay, so let's not bother ourselves with that one temporarily. Okay, so here we're getting, I think we ended here when we tried to get the Yahoo Apple stock prices from Yahoo from January 1, 2010 up to the beginning of January of 2021, January 1, weekly prices. Okay, so let's run this. Okay, so okay, gets the end of the week prices usually Friday unless it's a holiday. Okay, so where did I get that note that it gives us the average trading? Okay, let's just see for a while. So it's auto dot assigned by default, but we'll use in 0.5 to 0 for quant mode. You will still be able to use load symbols to automatically load the data, get options. Okay, will still be checked for alternate defaults. So the default is assigned that auto.assign is equal to true. It's shown once per session. Okay, so I haven't really encountered any problem with this. So let's just see first the generated data, the object Apple 2. Okay, Apple 2 is okay. So it starts with 1 1, and then it goes to 1 8. So notice, guys, that the the dates here are every 7 days. So that's a weekly data. Okay, and so this one, I'm okay. I stand corrected there, guys. I'm not sure if this prices. This must be the actual prices, guys, on this particular date. And it's referring to the volume. The volume here is not the volume on this particular date, but the volume of of the week. Okay, so I think that's what is being mentioned here. The volume is not the volume on, for this, in this case, for example, January 1, January 22. This is the price on January 22, the opening, the high price, the low price, the close, and then this is the average volume. Okay, I think that's what I read, which I copied here. I think that's what that means. Okay, so let's just go back to that. Let's just be sure about that. Okay. Okay, Yahoo Finance weekly and monthly. Okay, it's the volume that's being indicated here. So the volume reflected in the weekly prices, this volume is not the volume on this particular date, but the volume of that particular week, of this particular week. Okay, so for this one, January 8, 2010, this should be the volume from January 2, 2010 up to January 8, 2010. Okay, but the prices are the for weekly, it should be the end of the week, and usually it's a Friday. For monthly, it's the end of the month, 30th or 31st. Okay, so that, I hope that clarifies. Bali, yes, if you plot this burn, you get a weekly chart. Okay, if you plot this. Okay. All right, so let's continue. Okay, sandali lang, guys, ha. Let me just take care of someone knocking at the door. Okay, sorry about that. All right, so Okay, there's this next question here is, what kind of data is Apple One? Have we run Apple One? Let me just see my global environment. Okay, no, I haven't run Apple One. So let me run Apple One. I think Apple One is the daily prices. That's the default. Okay, here Apple One. So let me let me run Apple One here. Control Enter. So this is daily data. 4, 5, 6, 7, 8, 9, and 10 are weekends, so they're not present here. Okay. All right, so let's go back here. Okay, so we're being asked what's the class of Apple One? Apple One is, okay, it's an XTS object. So someone chatted me a while ago asking for the difference between XTS and Zoo. Not much really, but originally it started with Zoo. And I just forgot the origin of where this package came from, because matagal na rin tong package na to. But Zoo was improved on to another type data object, XTS, extensible time series. But when we work with time series, whether it's a Zoo object or an XTS object, they're practically the same. So we will not look into the nitty-gritty difference between a Zoo object or an XTS object. Okay, so I hope that answered your question. No, the distinction between XTS and Zoo. But if you want to really dig deeper and see really the nuances of the difference between XTS and Zoo, then of course you can do that by looking for. Okay, so why don't we do that, please? Okay, so let's see difference between Zoo and XTS objects in R. Okay, here, guys. So it's coming from Quora.com. What are the main differences between XTS and Zoo functions? Okay, so let's just look at this. As I mentioned a while ago, guys, nauna kasi yung Zoo, no? So in-extend lang yung Zoo to become XTS and provides more functions for data processing and data conversion. Since XTS is let's say a newer package, newer type of data, then it provides more functionalities. That means that most details of Zoo can apply to XTS. Okay, the main benefit of using XTS is the compatibility with the other packages that use different time series classes. Okay, so there's a package called time series, and of course, alam natin na may Zoo. XTS allows us to use the functionalities of XTS in the different older type of time series classes, like the time series data or the Zoo data. In addition, XTS allows the user to add custom attributes to any object. Okay, so for more details about this, guys, then you can go here to these references. Suffice it to say, guys, for us, we will not really distinguish between XTS and Zoo. But of course, when we get prices using Quant mode, automatically, guys, it gives us an XTS object or a Zoo object. Okay, so here you see class Apple, it's XTS, it's also Zoo. It means that if you use Zoo functionalities, guys, this will work. Or the more expanded XTS functionalities, it will work. Because if it works for Zoo, then it should work for XTS. That's what this really implies. Okay, for dimension, guys, dimension, this is a, okay, as I said, guys, this is different from a data frame. Okay, what you learned in your, I don't know, in your FinStar or your other subject, a data frame is a matrix type of object where you have rows and columns, where your columns are your variables. So it's like an ordinary let's say, data set where you have rows and columns, and your columns refer to variables, and your columns should have this should have the same number of rows. So, for example, if column 1, which represents variable 1, has 150 rows in it, then column 2 or variable 2 should also have 150 rows. Otherwise, guys, if there are differences in the number of rows, then it cannot be used as a data frame. So a data frame, guys, is similar to, well, loosely speaking, the structure is similar to an XTS object. The main difference is that in a data frame, the date column or the date variable is part of your columns. While on the other hand, an XTS object, the date is used not as a variable, but rather as an index. So let me flash Apple one. Okay, take a look at this, guys. Take a look at this. You notice that the date is treated as an index. It's not a variable. When you're dealing with data frames, you do not have this. Okay, you will find here instead 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then these dates will be another column here. So for example, nakalagay dito date sa column 1. So your date is a variable in a data frame. While in an XTS object, the date, guys, is not a variable. It's an index, which makes XTS objects really more powerful. Okay, before XTS, guys, before the XTS type of object, we would use a time series that have the data as a variable, and that can prove to be very troublesome oftentimes. No? When the date is part of a variable, then there can be some difficulties as far as coding is concerned. So the XTS object, or the zoo object for that matter, really makes time series analysis really very convenient. Okay, and we'll have examples of that when we go to next meeting, when we start discussing time series. Okay, guys, clear so far? And thank you for that question. Sorry, Santino, i-mention na kita, ha? Kasi ikaw yung nagtanong nun, and I appreciate that question. Thank you because of that question na discuss natin ngayon, and hopefully your classmates also learned about that. Okay? So, guys, clear yung distinction ng XTS, Extensible Time Series, at saka yung zoo object. Okay, pakicheck nga please kung clear siya. Santino, did that answer your question? I hope it did. Okay, thank you. And thank you for the others also who indicated that clear sa kanila. Okay, so aware lang tayo, guys, ha? Kasi, sorry, hindi pala tayo mag-multiple regression. No? Sorry, na-confuse ako kasi FinStar yung isang subject ko. Next meeting, mag-multiple regression na kami. And we're going to use data frames. Okay? Don't data frames done. Dito sa atin, we'll be using more XTS objects. Except, guys, in cases where we would need the data as a variable, the date as a variable. In that case, magde-data frames tayo. Okay? All right. So, for notes purposes, guys, ilagay ko na lang itong ano, no? Let me use this as a reference so that when I post this, in case someone would request for me to post this file, okay, lagay lang natin dito yung reference natin. Okay. All right. Okay. Now, one thing good about using quant mode is that marami siyang functionalities. No? For example, when we download stock prices from quant mode, you notice that there are 4 prices here. In fact, 5, may adjusted sa dulo. You have O, open, high, low, close. So that's OHLC. So that's what the OHLC in the code indicate. Open price, opening, highest price, lowest, and the closing. So that means that on January 4, when the stock market opened, Apple had the price of opening price na 7.622. Okay, and then it closed at 7.6 64. So the ending price, the closing price of Apple was higher than the opening price. And throughout the day, intraday trading, the highest price, it reached up to 7.66, and the lowest was 7.58. Okay, and then we have this adjusted price because at the end of the day, sometimes there could be stock splits and other adjustments to the stock price. So the adjusted stock price is 6.56. Now you would see some analysts would use the adjusted stock price. Others would use the closing. So there are different schools of thought about this. For us, we might be using, sometimes we'll be using the closing price, sometimes we'll be using the adjusted price. Okay, so going back here, guys, this asks the question, is the Apple One XTS object, is it OHLC? It means that, does it have the opening, the highest, the lowest, and the closing prices? Okay, so if we run this, okay, what we get is true, because indeed the APL1 object has OHLC, opening, high, highest, lowest, and then close. Also, this question has that VO. Does it have the volume? Okay, does it have volume? Yes. And here for head opening, ALPL1 gives us the first 6 elements of the opening column of Apple One. So let's run this there. So this is the index and the Apple that opened. The first 6 elements are given to us. So first 6, 1, 2, 3, 4, 5, 6. So that's the default for head. If you recall, guys, from for my FinStar students, the head will give us the first 6 elements, unless you want it to be the first 10. So you have to identify there the number of elements, number of rows you want are to return. So these are the first 10 elements. Okay, and for tail, it gives us the last 6. So notice this is December 31, 2020. Okay, it did not give us December 1, 2021 because there's no price for December 1, 2021 holiday. Okay. All right. So the function series high tells us when was the highest point of the series. So from January 1, 2010 up to December 31, 2020, which date did Apple One experience the highest high price? So if you click that, so that was on December 29. Okay, given the range from January 1, 2010 up to December 31, 2020, December 29 exhibited the highest in terms of the high price, okay, 138.79. So much so, guys, that if we check this here, the high price, if we go down, okay, you can see here that December 30, okay, Apple highest price was December 29, right? Was it December 29? Okay, let me check. Yeah, sorry about that. It's December 29. So let's just validate. December 29 of 2020. Yes, this is the highest as far as the high price is concerned, 138.79. Okay, so it correctly identifies the highest price because what we're asking is, okay, series high. Okay, how about the series low? Okay, as far as the object is concerned, Apple One, where can we find the lowest? Where and what was the lowest point of the series? Again, if we run this, it will give us January 29 of 2010. Okay, the lowest was 6.79. Okay. All right. Now, one good thing about quant mode is that it's very easy to plot the data. Okay. So here we're using base R. The plot function allows us to plot particular objects. In this case, what we want to plot is Apple 1, and then dollar here indicates that this is the specific column that we want plotted. So plot the object Apple 1, and specifically the column is Apple.adjusted. As you know, guys, this is the adjusted price, Apple.adjusted. That's the last column. Okay, so the code here is that plot. Okay, so let's run this. And it will, the default is a line graph. Okay. So this is how Apple behaved for the past 10 years, 11 years, January 4, 2010 until, okay, so this is December 30, 2020. Okay, and this was the highest point, as we can see here. This is the December 29. Okay, now quant mode also has what we call the chart series function. Okay, and it's easy to plot Apple 1. Okay, so you can see here, okay, this is the volume traded in millions, and this actually are candle charts. Okay, we can see it because of the range of the data, but we're going to show in another plot how this really looks like when we zoom in to a particular section. Okay, so here I have some notes here. Typically, one would like to see what's happening within an observation. Okay, so, but here, since we're asking R to plot the whole range from 2010 December, January 1, up to January, December 30. Okay, even if let's try to see if this will, we can, okay. You notice, guys, that there are different colors here. It's indicative of a candlestick here. So this is candlestick, and we're going to blow this up and see what this actually looks like when we choose a narrower frame of data set. Okay, so let me just minimize this. Okay, I'll close this. So iba, guys, yung yung plot na binibigay sa atin ni quant mode as against the base R. Yung base R, guys, it will not give us a candlestick approach. Okay. Okay, here ang notes ko dito, one can get the price changes for all combinations of columns across all possible periods. Simply combine the columns extraction tools from above to arrive at naming convention. Okay, so example lang tayo dito, no? Okay, here I want that I want R to give me both the opening and the closing prices for Apple 1. Okay, so since it's a head function, guys, it will give us the first 6. Okay, so let's go get this. Okay. Opening, closing, Apple 1, the first 6. So what does this give us? This combination of opening, close allows us to get the daily percent change open to close. Okay, so let's check this, guys. So this is January 1, January 4, 2021. Okay, let's see. The opening was 7.6225. The closing was 7.64. So the opening was lower compared to the closing of higher. So this is indicative that, ano ba, guys, plus positive ba to or negative? Since mas mataas yung closing, then we expect a positive daily percentage change here. So let's compute this. Let's show if this value is indeed okay. Where is that? Okay, this one, 0.0027. Okay, let's remember that. I'm going to get the, I don't think I can copy this. I can Control C, Control V. And then this one, the close, let me copy this. Oops. Control C. Okay, how do we get the daily percentage change? The daily percentage change will be, guys, okay, it will be the current value, which is the closing, divided by the opening, and then minus 1. So this is how we get the percentage change, okay? And this will give us, in fact, this will give us a decimal. Okay, so if I really want the percentage change, then I will have to multiply that by 100. Okay, so let's enter this. So that's 0.27%, or in decimal, let me delete the times 100. Okay, so that's 0.002717. And how did it compare to the result generated by R? 0.002717,481. Okay, exactly the same. So the combination of OPCL here, guys, this function, opening, closing of the object Apple1 will give us the percentage change between the opening and the closing for that specific day. On the other hand, the open will give us the changes as far as opening of the current period of the current date as compared to the opening of the previous date. Okay, so let's first run this. Okay, I'm going to insert something here. Okay, let's go to head and op and AAPL1. Okay, so I'm asking R to please give us the percentage change of the opening of the current date as compared to the previous date. Okay, so let me run this, and we have NA. Okay, NA because this has no previous opening, and then we have here 0.00548. So let me just copy this. Control C. Okay, so that's 0.00548. Let's check, guys. Let's check if this is correct. So it's opening. So take note, guys, there will be no percentage change as regards January 4 because it does not have any previous value. So if we take a look at January 5, okay, let's copy this, Control C, Control V, and then divide it by the price of January 4, the opening of January 4, Control C, and Control V, and then minus 1. So that's how you get the percentage change, guys. Getting the most current value divided by the previous value and just subtract 1. 0.005418. Perfect. Okay. Perfect. But I always get this question. Isn't it that the percentage change is equal to, so let me just, let's see. The percentage change, of course, can be written as the price at 2 minus price at 1, okay, divided by the price at 1. They're actually the same, guys. Okay, some of you might be more familiar with price at 2 minus price at 1 divided by price at 1. The only disadvantage with this one, guys, is that you'll have to type a lot. No? You have to type the parentheses, whereas this one, it's just the same anyway, because if you distribute P2, okay, so if you distribute P1, this becomes P2, right, divided by P1. And then we have a minus here, minus P1 over P1. So that's 1. Okay, so they're exactly the same. Only that, guys, when we're working with R or even Excel, it's better to use this formula. It's a lot simpler because you don't have to put parentheses. Here, you'll have to put parentheses. Okay, just a tip, guys. All right, so we're getting the correct answers, guys, uh, as I said, guys, when we want to get the percentage change between the opening and closing, we use this function op close. Between two consecutive opening, you get op, okay? In this case, guys, we just use the round function. The round function allows us to because here there are so many decimal places. If you just want 5 decimal places, you just use the round function, okay, and then comma, the number of decimal places you want the answer to be. So this one, run that. Okay, I'm sorry. It gave us everything. We could have just used the head just to give us the first 6 answers. Okay, there. Okay, so it drops off the other decimal places and gives us just the 5 decimal places. Okay, if it's 4, guys, then just use 4. Okay, clear so far with this when we're getting the percentage changes. So that function op close, op. Okay, clear so far, guys? Kindly chat, please. Okay, thank you. Okay, if you have any questions, please interrupt me, okay, and or post your question, or just can just unmute yourself. Okay, now how about subsetting? So Apple one, guys, is this XCS object. So we have 2,769 rows of 6 columns, consisting of the opening up to the adjusted. If we want just to see, okay, so here I want, suppose I want to create an object called Apple 2010. Okay, so I'm creating an object called Apple 2010, and it's coming from Apple 1, and we're just subsetting 2010. Okay, so to subset, guys, we use the brackets here. That's for subsetting. And here I have 2010. It will not work, guys, if I do not put here the either the quotation or the what do you call this? Quotes or the apostrophe. Okay, so Apple 2010. Okay, let's run that, and you can see here that we generated an object called Apple 2010 here below in the global environment, and it's also an XTS object containing, see, let me increase this. Okay, so it did not indicate here 2010 01 up to 2020 1225. So only sorry, this one January 4 up to December 31 2010, only 2010 objects data. Okay, so if I if I want to have to see this in the tab here, okay, where's that? Here. So let's just use a view, or just click this, guys. Okay, so let me not type view. I'll just click this Apple 2010, and automatically it will generate this. Okay, so these are just 252 entries. So this is for the whole year. So for the whole year, usually on the average, it's 250, 252, depending on the holidays. Okay. All right. So we can subset, we can create an object. So if we want only 2010, we can do that easily. Okay. So this one for 2011, okay, this one, okay, this tells us just the January of 2011. Okay, so if I run this, notice that it's only January of 2011. There are, okay, okay, it didn't specify. Okay. So from January 3 of 2011, the first trading day of January 11 until January 31, 2011. Okay, so the code for that is this one. We were subsetting Apple 1, and then we identified the year and identified the month. Okay, we can, of course, have a series from, okay, this is June of 2019, okay, up to January 12 of 2020. So this will give us daily stock prices from June, the first trading day of June, until January 12, 2020. So let's run this. Let's see. So this is starting with January 3, which is the first trading day of June of 2019, until this January, was it January 12? Let's see. Until, okay, that's January 10 of 2020. Okay, did it give us the data that we asked for? Okay, so this is January 12, but since January 11 and 12 are weekends, so it did not give us the data for January 11 and January 12. Okay, how about this, guys? Well, this is just the same as Apple 1. Everything in Apple 1. Okay, so apostrophe, then colon, colon, apostrophe, it means everything. So it's just the same as Apple 1. Okay, how about this? Apple 1. So 2012. Okay. So this is, sorry, this is not GS, this should be Apple. So everything in Apple from 2012 onward. Okay, so this will start with the first trading day of 2012 and then up to the end, which is, the end is 2020, right? December 31. Okay, so any questions, guys, as far as really navigating through using quant mode and using the subsetting? Okay, very easy to create another object, another XTS object. Okay, just like what we did here, we created Apple 2010. Okay, and then we subsetted Apple 1 just to include all 2010 prices. Okay, so this one from 2012 until the last, and you can create a non-contiguous data set, XTS object here. It's 2020 January, 2020 February, and 2020 December. So for the 3 months, okay, so let's see this. Okay, I don't think we printed it. Okay, so I'll just, let me just highlight this, non-contiguous. Okay, now, okay, so take note, guys, that January, February, non-contiguous. So we're not tapping, guys, we're not tapping. Okay, C, 20. Wait, I got confused here. So C. So this is just a vector. Vector lang siya, no? Okay, kasi, sorry kasi guys, hindi natin, we didn't use Apple 1. So this is just a vector. Okay, I think I made a mistake here. So that's just a vector, guys, of non-contiguous. And then if we want the non-contiguous, guys, okay, ito yun. Apple 1, and then defined by the non-contiguous, which are these 3 dates. Okay, so let's run that. There. Okay, we identified first the dates under the non-contiguous object, and then we use that non-contiguous object to subset Apple 1. So there are, okay, 2020 January, and then February of 2020, and then December of 2020. Okay. All right. Any questions, guys, so far? So we're having flavors of the power of quant mode here. Clear so far? Paki-chat naman please kung okay tayo so far. Okay, how about the rest, guys? Okay. Okay. Thank you, guys. More than half of you signify that so far clear. No? Okay, I'm looking at the time, and we have around 30 minutes. I think we can finish this. That's good. So my objective was really to finish this so that we can already start with the main lesson. Okay, this was more also a review of the use of R Studio, and also navigating through an R Markdown file, and also using the power of quant mode. Okay, so okay. Okay, how about, guys, the last? Okay, last 8, it simply gives us the last observation for the first line. So the last observation as far as Apple One is concerned, we know this already, it's December 31, 2020. Okay, and we can also ask for the last 8. So last 8 from December 21 up to December 31. Okay, and then we can combine this with the other other quote unquote quantities. So last Apple, but we want the last 3 weeks. Okay, so this is the last 3 weeks for Apple. And how about this? We can ask for everything except the last 3 weeks. Because of this last, so we're telling R, generate all the objects except for the last 3 weeks. So that means except for this data. So it will include January 3, I think, or January 4, 2010, up to either December 13 or December 12, depending on what day this is, okay, of 2020. Okay, then we can also use, of course, the last 3 months. The last 3 months that will give us, so October, okay, November, and December of 2010. There. So very convenient, guys. If you want to subset, you can use the first and the last, or you can use the subset function. They give us the same. All right. So first 2 weeks, okay. Okay, so this was the first 2 weeks of Apple from January 4 until January 15. So these are the first 2 weeks of trading, starting with 2010. Okay, then this one, the last of the first, okay, 2 weeks, and then just the last 3 days. So it will give us this one. Okay, 13, 14, 15. Because first, Apple will give us the first 2 weeks. So this is the first 2 weeks, right? And then the last of this is 3 days is January 13, 14, 15. So, yeah, of course, guys, there's an easier way to do that. There, 13, 14, 15. Okay, so these are very important functions. Okay, so for example, we want to know the periodicity of Apple One. We know that this is daily. So daily periodicity from January 4 up to this December 31, 2020. Okay, so what's the meaning of unclass? Unclass of the periodicity of Apple 1. Okay, so this gives us some information. Okay, so time difference in days. Okay, from the first trading day up to the last trading day, there are 86,400 days all in all, as far as Apple 1 is concerned. Frequency, so 86,400 okay, data points. Okay, and then we're given the start and we're given the end. Okay, the units in days and the scale is daily. Okay, so this is what the unclass function, it will actually dissect the object and then define the frequency, okay, and the other parameters. Okay, now how about this to weekly? If we want to convert Apple to weekly, okay, so what happens? Okay, so let's put here a parenthesis to weekly Apple 1. So it will generate now, okay, same as the weekly, the the periodicity equal to weekly. Diba Apple 2 yun? Okay. 1, 8, 15, 22. Yeah. So 1, 8, 15, 22, the same. Okay, so another way to generate the weekly time series, weekly data, is using this. 2.weekly and then the object Apple 1. Okay, then also we can, let's say we just want the 2020 data. So 2 weekly, so let's run this. 2 weekly for 2010. Okay, so this is the whole of 2010. This is the weekly data for 2010. Or you can put it to monthly. So this will just give us the monthly prices. And this should be the ending prices. So let's just investigate. January 2010, 7.62250. Where is that here in Apple? 7.62250. So it's the beginning, okay? And then let's see for February. Okay, sometimes this can be tricky. Sometimes it's the end of the month. Sometimes it's the beginning of the month. So February, let's see February. Sorry. Wait, it's Apple 1. Okay, this is February 1, 6.870357. And just to be sure that 6.870357. Let's see the object generated. 6.870357. Okay, so you notice, guys, if we convert it to monthly, it will generate the first day of the month. Okay, so this is January 1, February 1. How about the volume? Just to make sure that okay, this is the volume is 1866. Okay, so this is where what I was saying a while ago. 1867. If we look at the volume here, okay, January 10. Okay, so this is the average volume. Oh, how can that be? Okay, further in. Okay, sorry guys, I'm looking at the data. Yeah, it's possible because there are volumes that are quite high. Okay, so anyway, we'll just take R's word for it that when they took the average volume, it was the average for the whole month. Okay, then of course, the periodicity for the monthly should be monthly dapat yan. there, monthly periodicity. And then, okay, and days, okay, and weeks and years. This just tells us how many days all in all, how many weeks, and how many, okay, and months, let's include that, AAPL1. Okay, let's see, number of weeks, number of days, number of weeks, number of months, and number of years. Let's run this. Okay, so for Apple one, there were 2769 number of days, 574 weeks, 132 months, and 11 years. Okay, let me see here. Okay, let me pause for a while, guys. I might be going too fast, but we'll be finishing this very quickly soon. Okay, we have around 25 minutes. We can do this. Okay, now, aside from that, guys, you can actually get exchange rates also. Okay, there are other sites by which we can, for Wanda, we can get maybe next meetings. We're going to use the other features of quantmod and download other information aside from not only stocks but also macroeconomic data. We can download it from Fred. Okay, also Wanda, OA and DA. That's a website where we can get particularly exchange rates. Okay, Wanda is a very powerful package for a site, okay, for getting. Okay, let's just look at that first, okay, so that you're familiar. Okay, and let me see your chat, guys. Are you also familiar with Fred? Federal Reserve of St. Louis, Federal Reserve Database of St. Louis. Okay, good. Okay, so there are many sites whereby we can get many data. One is Wanda. Okay, so Wanda is a foreign exchange company. Here is a good place to get foreign exchange rates. Okay, but yeah, you can use also quantmod to do that. However, it will be limited. Okay, limited. You only get limited exchange rates. If you want really a full bloom, I think you have to subscribe, and there's a payment for that. You have to subscribe with Wanda. Okay, Wanda specializes in foreign exchange rates. Also, for Fred, guys, I want you to be familiar with this as finance students. Fred, okay, St. Louis. Yeah, for example, this one. Okay, Fred, St. Louis, the Federal Reserve Bank of St. Louis. Okay, this is a very interesting site, guys, because you'll drown by the so much data available here. Okay, so whether it be macro data, guys, GDP, CPI, inflation, okay, Gini, okay, and the others, guys. So a lot of information that we can download from this one. So I would suggest that, guys, that you do surf a bit, guys, itong Fred na to. Okay. You can get tons of data in this economic data, Fred economic data site. Okay, so why don't I copy the reference so that in case I share this with you. Sure. So let me other sources of data aside from Y Finance. Okay, we have Wanda. Okay, so let me just copy the link to this. And you can use, guys, quantmod in order to get information from Wanda, but as I said, it will be limited. Okay, this is for foreign exchange. we can also get some data from Yahoo Finance. Okay, so for example, the code is get FX. So let's say US dollar, Philippine peso. Let's try this. Okay, so it will only give us one here. US dollar, okay. So USD PHP, guys. It's an XTS object. Wait, did we name that? Okay, wait, let me check first. Okay, it automatically created an object. Okay, let me check first, guys. Let me check if it, okay, let me check. Remove the USD PHP. Okay, I'm going to remove this. Okay, so nawala yung USD PHP, no? It's no longer here in our object. Now I want to test if the USD, because I might have run this a while ago. Okay, so let me just check. So let me rerun this, get FX, Control Enter. Okay, there, and it generated. Okay, this object came from this function. So there was automatically an XTS object created. So let me run this. Okay, there you go. So the default is from, this is April 30, 2021. Okay, until, so there are 179 entries. Okay, until 2021, October 25. So it's more than a year, right? Because this is sorry, it's 10/4, so it's half a year, 6 months. Okay, so we can see here the different exchange rates, USD, Philippine peso, using Yahoo Finance. And the code allows us to generate an XTS object immediately, but just by using the get FX. Okay, I'll check attendance later na lang, no, at the end of the period. Okay, so let's go back here. Okay, so the periodicity for this one is the object USD PHP. It's daily periodicity from April 30, 2021 up to October 25, 2021. And how about if we do this to weekly UHD PHP? Okay, so this one, it now became weekly FX rates. And then the periodicity for this, it's now weekly periodicity from May 2 up to October 25, 2021. All right. So we mentioned other sources. Now let's go, guys, to charting. So this is just an introduction to charting using quant mode. Okay, so let's get the Netflix data. Get symbols Netflix. And automatically, guys, there's this object Netflix. And as we discussed before, the default will always be, for this specific year, the default will be 2007. When you use this next year, I'm sure they will again adjust it because they're looking at 10 years, 10 or 11 years. The default will now become 2008. So it's up to the current date, the stock price of on 2007, January 1, Netflix was trading at 3.71. The closing was 3.8. Now, guys, latest, okay, it's now 663. So if you invested in Netflix at this time, guys, grabe na capital appreciation nyo, guys. Okay? Grabe yung capital appreciation. Naging 600 plus na yung stock price in Netflix. Okay. All right. So let's go back to our code, guys. And let's plot. Let's plot. So I want you to read this, guys, just by way of just to elaborate on how R, particularly quantmod, does the charting. It's a two-step process. First, the data is examined, okay, and how to best to draw the series is calculated. So there is an internal object that's created called the chub, the chart object. This chub is then passed on to the main drawing function. Okay. However, we don't anymore code that. Yung code natin, guys, yung chart series, it automatically goes through this process. Okay, so it allows for more impressive dynamic style chart additions. Okay, so the goal is to make it work without extra user effort, and the end is just what it does. Okay. All right. For missing data, the chart does not show anything obviously suspicious. Okay, let's plot this first. Okay, let's take a look. Okay, so asan yung plot natin? This one. Okay, here we're using the base R. Okay, this is the plot from the base R, and it will just give us a very simple time series plot. Okay, but if we use here chart series and Netflix, you have the volume and then you have the candlestick. Now we can't see the candlestick because of the range of data. But if we just specify, for example, chart series Netflix, just the December data for 2020. Okay, so this will default to a candlestick there. Okay, so what we saw a while ago was actually a candlestick, but since it's so small because of the wide range of data from January 3, 2027 up to December 31, 2020, we cannot really see the candlestick. Okay, so what's the candlestick, guys? You notice that there are two different colors. Okay, the green one and the orange one. The green one tells us that the opening price was higher than the closing price was higher than the opening price. Okay, opening, closing, mas mataas yung closing pala kaysa sa opening. So green. The orange one tells us that the opening price was higher than the closing price. It means that the price ended lower. The green one means that the price ended higher. Okay, what are these wicks, guys? What are these? So for example, this one. This is, okay, let's take a look at December 1. Okay, the December 1 data. December 2 na lang kasi, okay, sige, December 1. So what does this mean, guys? Green one, ibig sabihin nun, ano? Yung price dito is your closing, and then the price here below is your ending, no? Closing price, opening price. Okay, and then this one here, the wick here tells us of the lowest and highest. Itong point na to, guys, that's your highest. Then the lowest is the other one at the bottom. And since wala, guys, there's no wick here, ibig sabihin, in this case, the opening price was the same as the lowest price. Okay, if you take a look at January 2, December 2, for example. Okay, so this one, we have 2 weeks here. The upper point here is the highest price. The lower point here in your wick, in your candle, is your minimum. Okay, the top here, okay, this one, the top line here is your closing price. The segment here is your closing price. Okay, so that's about it, guys. It's very easy to understand this. Here, guys, since it's orange or red, this is your opening, the top line. This is your closing. This is your highest. This is your lowest. Okay, so let's see, guys. Let's see. This is Apple What did we plot? Netflix for 2020 December. So let me open Netflix. Let me do it here. Netflix here. Okay, Netflix December 2020. Okay, December 2020. So let me go down. Okay. Okay, so sensitive. Okay, here guys. So this is December 1, guys. So you see the opening was 492. The closing was 504. Okay. Right. So that means that you'll have a green candlestick because the price opened higher relative to the opening. And then there would be a wick, okay, the candle wick, because the highest price was 509 and the lowest price was the lowest was 491.98. Okay, so that's how quant mode plotted this, and this is the volume. Okay, clear so far, guys? Is this clear? The chart series. We can see here this is what we call the candlestick. Any questions about the candlestick, guys? Okay, thank you. Thank you. I'm sure you also met this in your investment. Okay. All right. Now about missing data. So let's just go over this very quickly. Okay. If you take a look at okay, this chart, are you referring to Netflix? Okay. Did we plot? Okay, I think I'm missing a code here. Because here it's talking about Apple. Okay, so what's important here is that there appears to be trades every day as the stock price bounces up and down with no obvious flat spots. Yahoo Finance data excludes trading holidays and weekends. So there would be no visible flat spots when we are looking at 10 years of daily data. Okay, now let's take a look at this code. Let's create an object called data missing, and then let's plot. Okay, let's only choose all the Netflix except the 2,000 and up to 3,000 data. So here we're going to create an object called data missing. It will include Netflix prices, but exclude the data from 2,000 up to 3,000. So let's take a look at this. Let's run this all together. There. Okay. All right. Here you can see, guys, the missing data. There. So it just connected data 1999 up to data 3001. Because we created an object called data missing, and then we removed, this is data 2000 up to data 3000. There are no prices here because we removed it, and it just connected. Okay, so this is the data 1999, data 3001, and the plot will show that there are indeed missing data here because it just gives us a line. Okay, so that's the plot of the adjusted. Okay, and we can also use, aside from chart series, we can use bar chart. Okay, and then we can we can identify, of course, the theme, the type of bar chart that we'll be using. So here the theme is white, Okay, the type is high, low, close. Okay. And then here it's everything, guys. Here it's only December 2012, December 2020, December 2020. And here the theme is black. Okay, and the type is open, high, low, close. Okay, so let's run this one by one. So for this one, okay, so this is a bar chart. Okay, notice now that there are no colors now here. Okay, you can see the green or the red one. Okay, we can't see it really because it includes all the data range of Netflix. But if we just identify this, okay, this one only there. So it's only December 2020. Okay, and this is similar to the candlestick. Here we only identify the high, the low, and the close. It does not identify the opening. So this is the high, this is the low, and this is the close. Okay, so if we're just interested in the high, low, close, you can use this, the type equal to HLC. On the other hand, if we want open, high, low, close, and we want the bar chart, so let's plot this. Okay, so what's the difference between this one and this one? Okay, so this is the bar chart. Okay, you notice that there are two wicks. The wick, guys, okay, let's take a look at this. This one is the high, this is the close. This one to the left of the bar chart is the opening, and this one is the closing. How do I know that? This on the other hand is the opening, and this one is the closing. How do I know that, guys? The color will tell us which one is the opening and which one is the closing. The green one, guys, indicate that the closing price was higher. Therefore, it should be the one, this one, the higher one. This is the lower one. Okay. This one, guys, is sorry, guys, I stand corrected. Okay, the opening will always be on the left. The closing will always be on the right. Okay, so this is the opening, guys. This is the closing, and it's red or orange because the closing was lower than the opening. Okay, notice, guys, in the green ones, the right segment here will be higher than the one on the left because the closing price is higher than the opening price. Okay, any questions, guys, about this bar chart? And we have only tapped the surface, guys. Other charts can be done using quant mode. Okay, so same as above, but this time these are candle charts. Okay, again, let's just choose the 2012. Okay, this time, guys, it's a candle. Unlike the bar chart where you only have a line. Okay, this one is a candle chart, and you have the theme white dot mono. Here you have a theme black. Okay, so it's a black background. So this is similar to the chart series that we did a while ago. So it's the same candle chart. Okay, you can also use line chart. Okay, so let me just run this too. Okay, wait. Oh, sorry, Netflix. Okay, wrong spelling. Okay, this is line chart, guys, and this is also line chart. So similar to the plot series. Okay, guys, it's already time. So may I request you guys to just go over this? Okay, what's important here? This one, guys. We're going to go back on this. Okay, these are, let's say, Bollinger Bands. This is commodity channel index. Okay, so let me just run this. Okay, take a look at this, guys. Okay, so for plotting, guys, wow, Quant mode really provides us with good plotting options. Okay, so you have the volume here, you have the CCI here, and then here you have the Bollinger Band here, this one. Okay, we'll study this in greater detail in the future, guys. These are used for technical analysis, okay, used for decision making, whether should we buy, sell, okay, some rules as far as technical trading is concerned. All right, I just wanted to show you that. Okay. All right, so may I just request you guys to this, okay, madali na to. We have done that before. These are now returns, no? Okay, it's important, guys, to know that we can generate, we can compute for the returns. May I have just this one, guys? Just this one last minute. Okay, Control Enter. So this gets the symbol of Starbucks. Okay, it also plots Starbucks. This one. So this is the candlestick plot of Starbucks, and it gets the return, daily return of Starbucks. Okay. So where is that? Daily returns, it should be, okay, it's here. This one, daily returns. Okay, so you notice, guys, okay, let me quickly create an object. Okay, here, I call it DR1, okay. Daily returns of Starbucks, okay, let me run this. Okay, so we have DR1. It's also an XTS object there, guys. It gives us the returns. Okay, so anong returns ang ginamit dito? Log returns ba to, guys? Asan si Starbucks? Sorry guys, just a few more seconds. Starbucks, where's our Starbucks? SB there. SBUX. Let's just identify, guys, kung anong klaseng returns ang ginamit. No? Ginamit ba niya yung adjusted or yung closing? So let's just copy first the closing. Control C, Control V. May 5 dito. And then the closing for this one. Control C. Control V. Okay. So this is daily returns. Control Enter. 0.00113. Let's see, guys. There's our no, it did not use the closing, guys. So I want you to find out anong ginamit na returns sa pag-compute ni Starbucks. Okay? So we'll end there, guys. Thank you so much for